Welcome to my deep dive into TripAdvisor's stock. The big question, could this travel giant's shares, currently trading around $18, ever hit $1,000? Let's get right into the numbers, the competition, and what the future might hold. TripAdvisor, ticker Trip, is a global leader in travel reviews. It's racked up more than 1 billion user contributions, and it powers everything from hotel bookings, to restaurant reservations, to experiences via its Viator platform. In short, it's one of the first places travelers go to plan their perfect trip. But does that translate into big returns for investors? Here's how the financials stack up. For 2024, TripAdvisor's revenue is expected to land at about $1.7 billion, but its net profit margin is slim, just 3 to 5%. Compare that to Booking Holdings, where margins run about 30%. TripAdvisor holds about $900 million in debt, but generates enough cash flow, roughly $200 million a year, to keep things stable. Viator is actually the star performer, now driving 30% of revenue with higher margins, while advertising, still the core business, brings in less profit. The price-to-earnings ratio hovers around 20, pretty standard for a tech stock. But with only modest growth, a $1,000 price target would demand a 5,000% jump. That's nearly impossible unless we see a total game changer. Now, strengths and weaknesses. TripAdvisor's main edge is its massive review database and strong brand, plus Viator's rapid growth. But competition is fierce. Google Travel, Booking.com, and Airbnb are heavyweights, and TripAdvisor's heavy reliance on ads makes it sensitive to economic swings. Platform reliability, that's a common user complaint. Let's compare the competition. Booking Holdings dominates with high margins and a global booking engine. Expedia offers a wide range of options but carries more debt. Google Travel uses its search power, and Airbnb leads in unique stays. TripAdvisor's niche in reviews and experiences is solid, but it just doesn't have the scale of these giants. Looking ahead, TripAdvisor's making big bets on AI-powered personalization and wants to take Viator even more global. The growth of tourism and emerging markets could help, but there are plenty of headwinds: regulation, geopolitics, and tough competition. As for dividends, TripAdvisor paid a one-time dividend back in 2019, but don't count on regular payouts, so it's not a dividend stock by any means. So, what's the investment outlook? In the short run, TripAdvisor could see a 10 to 20% pop if travel demand stays strong, but it's a volatile ride. Long-term, I'd expect annual returns in the 5 to 8% range, lagging behind the S&P 500. A $1,000 share price? Not likely. For now, TripAdvisor looks like a hold for patient investors banking on Viator's growth. What's your take? Drop your thoughts below, and subscribe for more stock analysis.